Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets trade lower as US-China trade tensions weigh on investor sentiment. Finance Minister Arun Jaitley announced a 5-point plan to cut down the current account deficit in an attempt to strengthen the rupee. IL&FS fundraising plans will likely take at least a month. The board awaits shareholder approval to raise the ceiling on debt and equity capital. Ircon International opens for subscription today with a price band of 470 to 475 rupees per share. Let's talk about international markets and just give you a little context for the start of trade today. Let's talk about the US stocks that ended or inched higher for a fifth straight day on Friday as declines in real estate and utilities were offset by gains in banking stocks. The rally was also driven by a rise in the 10-year US government bond yields above 3%. Abigail Doolittle of Bloomberg News wraps up Friday's Wall Street session in this report.
Stocks finished little changed in Friday's Wall Street session, but mixed. The Dow and the S&P 500 fractionally higher. The tech-heavy NASDAQ down ever so slightly. Not surprisingly, then, technology as a sector did finish to the downside, but just slightly, less than 0.1%. Greater underperformance, a bigger drag came from the utilities group, especially NiSource. Those shares down more than 10%. This as there was a series of explosions and fires in the Boston area, and that happened on that utility holdings company's their gas line. So investors rather cautious about how that might work out. As for an area of outperformance within technology and to the overall markets, the chip sector, the stocks, up more than 1%, up for its second up day in a row, really being helped out by AMD on Friday, a big reversal from Thursday's action. AMD finishing up about 7% after dropping about 5% on Thursday, gaining on Friday after Argus raised its price target to $40 per share. That's an investment bank joining a chorus of bullish analysts on AMD, although the stock up more than 120% this quarter, technically vulnerable perhaps at this point. But on Friday, those gains really helping some of the other chip stocks, including NVIDIA, those shares higher as well. Tesla was another winner on the day, up about 2% on a report that the company is on track to meet its Model 3 production targets. So investors cheering that news. And finally, on the week, stocks gained. The S&P 500 up more than 1%, its best week since the middle of July. Haven bonds in the yen sold off, making the week risk on. In New York, Abigail Doolittle, Bloomberg News.
All right, let's take a check on the Asian markets as of now. Let me also inform you that the Japanese markets are shut today and the Chinese markets have just about opened up. In fact, the market in Hong Kong as well, despite the fact that Typhoon Mangkhut has apparently made landfall. However, the warning or the scale of that storm is not as high as was initially predicted, so the markets will be open for trading. In fact, the first few ticks on the Hang Seng have been significantly lower. We'll have to wait till the dust settles to give you a clearer picture as to how that market is opening up. But the Chinese benchmarks also opening seemingly with cuts of about 0.8% and 0.7%, so significant cuts there for the Chinese markets. Remember, the early risers, the Kospi, in fact, if we were to talk about the early risers, had cuts of about 0.5% earlier in trade. It continues to do so. All right, but let's turn to India now and take a trade setup for the day in India, and also a conversation about the futures and options space. To tell you all of that, here's Darshan Mehta. Good morning, Darshan. How is it looking this month?
See, when we started a while back, the SGX Nifty was trading flat. Now cuts are seen because most of the Asian markets are reacting, and no doubt we had a fabulous run on Friday, so a little bit of profit booking is seen. So let's take a look at first what the SGX Nifty is indicating. We are again close to the 11,500 mark in trade. So it was down just 4-5 points. Now it's down almost 40 points in trade. But remember, we still have 2 hours to go before market opens. Let's take a look at how the ADRs panned out in trade. And Vedanta, Dr. Reddy's, ICICI Bank, HDFC Bank, all of them rallying compared, as indicated that the rally that we saw in Friday's trade. Infosys, Wipro, as well as Tata Motors were down in trade. Again, the rupee now moving on the reverse side, and that is why Infosys and Wipro seeing cuts that came into itself. So IT sector is something that you need to watch out for. A massive 150-point rally that was seen on the Nifty, and similar amount of move coming in on the mid-cap and small-cap end of the market. So there was a rally across the sectors in trade on Friday. Looking at the gains that are coming in on the Nifty Bank, the Nifty BSU Bank almost up 2% in trade. So Friday was a decent day, a huge amount of short covering that came in. Look at some of the sectors that managed to gain in a single day. You had the real estate sector, which was up 4%, pharma, metal, all these sectors rallying significantly in trade. Now, if you're looking at some of the weak performance that happened in trade, the metal and infra index managed to move up almost almost 0.3 to 0.2%, and this is after a rally that we saw. But nevertheless, the first 4 days were absolute panic as far as the market was concerned. So that's why the auto index, the small cap index, the Nifty Next 50, all of them carrying cuts of almost 1.3%, and this is after the big gain that we saw in Friday. So if Friday was not there, we would have been deep in the red as far as the week was concerned. FI's massive 1,000 crore of buying that came in, DIs were also net buyers, but for the month itself, FIs have been net sellers as far as this market is concerned. Now, if you're looking at the Nifty contribution, 150-point gain on the Nifty. Basically, it was the banks that led the rally. HDFC Bank, the HDFC twins carrying it. ICICI Bank has a large weightage on the Nifty, on the Bank Nifty, and Indiabulls Housing Finance moving up. What didn't contribute? The IT stocks, HCL Tech as well as Infosys were down in trade. Reliance negligible downside, but it was basically the banks that led the rally on the Nifty. Now, how did the F&O market pan out in trade? Obviously, there was short covering that was seen on the Nifty, as I indicated. Open interest is down 1.9%. The Nifty moved up 1.2%. Even if you're looking at the Nifty Bank, look at the covering that has come up. Open interest was down 17%, so massive short covering that was coming out on the Nifty Bank itself. Now, if you're looking at where positions are taken, this is where positions were taken. Put writers became aggressive at 11,400, 11,500. They wrote in again at 11,600, 700, where they were shedding positions in open interest. But at the same time, call writers are also aggressive at higher levels. So the range still remains at this point of time. 11,500 now is the big support that the market is looking at, and at higher level 11,800 is the resistance. Now, if you look at what happened on Friday, clearly you could see that call writers had shed positions at every level since the market saw a big 150-point rally, and put writers became aggressive at 11,500. But remember, if 11,500 is taken on the downside again today, as the ASX 50 is indicating, there will be the slide will be much faster as compared to what it was. Now, if you're looking at the stocks in the F&O band, there are two stocks, Adani Enterprises and Balrampur Chini. That's the new one post the big rally that we saw that came in on Friday, all the sugar stocks. The Nifty PCR moved up to 1.38 from 1.29. The Nifty Bank PCR also managed to move up to above the 1% level. A couple of stocks that I want to point out. First of all, Balrampur Chini, high open interest build up of 34% on the entire sugar rally that happened because of the government norms that came out, was up almost 14% in trade and moves in the F&O ban. The next stock that I want to point out is Amara Raja Batteries. Despite the market moving up, high open interest build up on the short side. Open interest build up was 14%. You have Granules India again close to 120 level. Fresh longs was seen on open interest build up of 5%. And finally, the last stock is Tata Global. Huge amount of short covering. Open interest was down 13%. The counter was up almost 5%.
All right, thanks so much for that, Darshan. Let's also talk about the rest of the emerging markets, in fact, because they've been in focus. Darshan mentioned a bit of that when he spoke to you about the markets in India. But Toby Lawson, Managing Director at Societe Generale Securities in Australia, believes that a rising dollar crimps a risk appetite, causing foreign investors to pull back from emerging markets as a whole, reducing access to funding and dimming growth prospects. Listen in.
As an investor, you probably look at the relative value in EMs and think, that looks like represents a pretty good value. And particularly if you look at the underlying fundamentals of some of the economies within the emerging market space, they're not in too bad a shape in a relative sense. But obviously it's really driven by US dollar and how much debt is denominated in US dollar for some of these emerging markets, and therefore how they have to then ultimately respond through interest rates to protect currencies. So look, they're still vulnerable in that sense. But for those looking at the absolute price movements that we have seen, particularly in August, we saw a 3.7% increase in US stocks versus a 2.7% decline in emerging markets. That spread on fundamentals would say, look, there's value there. But right now, with the momentum trade going on in US dollar, it's very difficult to say, right, let's get into EM now.
All right, now let's talk about the Indian currency and, in fact, what has been leading to the kind of selling that's been taking place in the Indian currency. Of course, there's a lot of international pressure with regard to the currency markets, but there's also a question about the macro economy in India and the economic data points that have been coming up. In fact, you had the finance minister who spoke on Saturday after a meeting with the Prime Minister, where the Prime Minister took stock of the situation in India with regard to the economy. And what he said was very clearly and very categorically that the government would stick, first of all, to its fiscal deficit target of 3.3% for the current financial year. And Jaitley also laid out a 5-point plan to bring the current account deficit back under control. And I'm going to read through just a couple of these for them to sort of set the context into what we're doing with regard to the rupee check that we do in just a short while from now. First of all, they're talking about mandatory hedging conditions for infrastructure loans that will be reviewed. This is in regard to external commercial borrowing. Second, you also have the manufacturing sector entities that are likely to be permitted to avail external commercial borrowing of up to $50 million with a minimum maturity of 1 year. This was initially 3 years. The next one is a removal of the exposure limit of 20% of FPI's corporate bond portfolio to a single corporate group, company or related entities, and also the 50% restriction of any issue of corporate bonds that is likely to be reviewed. And this is all with regard to the FPI investment in debt. The next couple of points relate to masala bonds, and in fact there is a call for removing or exempting the withholding tax for all issuances of masala bonds in this financial year. And there's also a move to incentivize market making with regard to masala bonds, so the banks are also going to be incentivized to play a larger part here. So all of those factors in an attempt to bring the current account deficit back under control and also to lend some strength to the rupee. And speaking of that, let's take a check on the rupee and the bond market. Saloni Dhanuka is joining with all the details. Saloni, we just set the context really for what the Prime Minister was talking about with regard to the rupee. What do you have for us?
So Alex, as you mentioned, over the weekend, government has announced 5 measures, as you rightly pointed out, to check the rupee fall and also to maintain the current account deficit, and this will likely bring some relief for the currency markets today in trade. That's what the traders believe. Well, last week on Friday, rupee ended higher, 0.5% higher versus the dollar, and ended at 71.86 levels versus the dollar. Now, however, for the week, if you see, home unit has depreciated almost 10 paise versus the dollar, thereby marking its 3rd weekly fall. That apart, India's foreign exchange reserves slipped below the crucial $400 billion mark for the first time since November, as RBI stepped up to support rupee that we have seen in the last few trading sessions. Speaking of the bond market, sovereign bonds gained for the 2nd consecutive day as yields on the 10-year benchmark security dropped 1 basis point to end at 8.13%. For the week, yields were up nearly 8 basis points. That apart, on the global front, the dollar index now trades higher for the 2nd consecutive day, largely on the back of upbeat US economic data that we have seen on Friday late evening. Be it industrial production or their retail sales numbers came in better than expected. Well, that apart, euro and pound both ended lower versus the greenback on Friday, and it are now trading lower in the early Asian hours. And lastly, speaking of dollar rupee, now it is trading at 72.10 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade, Alex.
All right, thanks so much for that, Saloni. Now, let's talk about the second IPO from the Indian Railways stable. Ircon International, which is an engineering and construction company, is looking to raise a little less than 500 crore rupees from the primary market. Somit Sarkar is here to take you through all of the details of that offer, which opens for subscription today. Somit, what do you have for us? Good morning.
Good morning, Alex. This is the second company from the railway stable that will be coming out with its IPO. It's Ircon International. The price band for this IPO is 470 to 475. It should be 475 and not 474. And the offer size is close to 467 crore rupees. And at the upper end of the price band, that is 475, the company will be valued at close to 4,500 crore rupees. Now, if you see, it is an engineering and construction company, and the company has been incorporated by the Ministry of Railways, and its primary focus is on the railway orders. Now, if you see the order book of the company, it's close to 22,400 crore rupees, of which 87% of the order book belongs to the railways. So you can see how the company's primary focus has been on the railway sector orders. Now, if you see the company's revenue, 2/3 of its revenue comes from the railways. So the company is mainly focused on getting the railway orders, and the growth also depends on the railway orders. Now, if you see over FY15 to FY18, the company's order book has grown at a compounded annual growth rate of around 30%, and the current order book of around 22,400 crore rupees gives a good revenue visibility of over the next 5 years for the company. Now, if you see the company's financials on the over FY13 to FY18, the company's revenue, net profit and EBITDA have seen a degrowth of around 1%, 12.6% and 13%, but that was because of lower international orders. But over the last 3 years, that is from FY16 to FY18, if you see, all the three metrics, that is revenue, net profit and EBITDA of the company, have increased over FY16 to FY18. Now, on the balance sheet side, if you see, the company has a total debt of close to 3,200 crore rupees, but it's a pass-through debt, so technically it's a debt-free company, and it has a high net worth, and its book value per share is close to 400 rupees, and the cash value on the books is close to 1,200 rupees, which translates to a cash value per share of close to 128 rupees. Now, on the return ratio side, if you see, the company's return ratio have increased compared to FY17, and for FY18, the return on equity, return on capital employed and return on assets stood at around 11%, 6.1% and 3.7%. Also, the company has been consistently paying dividends over FY14 to FY18. If you see, the company's dividend payout has increased. It's increased from 24.4% in FY14 to close to 47% in FY18.
Sumit, what about the pricing of the offer, and how does it compare with its peers?
Now, technically it does not have any peer, but just for valuation purpose, we have compared it with NBCC India, Engineers India Limited and RITES, because RITES was the first company from the railway stable to come out with an IPO. Now, its valuations are very cheap. If you see the FY18 price to earnings, price to book and EV to EBITDA, all are lower compared to its peers like NBCC, Engineers India Limited and RITES. For FY18, the price to earnings is 11 times, price to book is 1.2 times, and EV to EBITDA is close to 7.3 times. And on the brokerage side, if you see, all the brokerages have given a subscribe rating for this IPO. In fact, Motilal Oswal and ICICI Direct have given a subscribe for the listing gains, so they are also expecting good listing gains from this IPO. Now, the subscribe rating was on the back of the reasonable valuations, the robust order book of the company's healthy financials, and the growth opportunities that these brokerages are seeing going forward.
All right, thanks so much for that, Sumit. Let's move on now and take a check on all the stocks that you have to watch for in trade today on account of them being in the news. Shraddha Babla is joining us with the stocks and news. Good morning, Shraddha. What do you have for us?
Good morning, Alex. I'm going to start with REC, that is Rural Electrification Corporation, which reported its Q1 numbers on over the weekend. So the hit on account of the move to Ind AS accounting norms was more or less in line with expectations. The net interest income corrected by about 10.5%, while net profit grew by 36%. That's largely on account of higher other income and lower impairments. Net interest margins dropped by nearly 90 basis points on a year-on-year basis to 3.72%, but improved marginally on a sequential basis. Loan growth remained healthy at 16%. However, the sanctions were weak and were down 45% year-on-year, while disbursements growth was muted, down about 8% on a YOY basis. However, the coverage ratio under Ind AS has increased from 21% in March quarter to 47%, and overall the gross NPA number rose nearly 1 percentage points to 8.12% on a Q-on-Q basis. That apart, we're also watching out for Infosys, which has acquired 100% stake in cloud consulting and training services company Fluido for 65 million euros. That's about 550 crore rupees or so. This will the acquisition will strengthen its cloud capabilities and also the presence in the Nordic regions. Cipla's Uganda arm has raised 16,600 crore shillings from its IPO listing in Uganda, and the market capitalization will be around $250 million. That's what Bloomberg News has reported. Stellite Technologies also will be in focus on the back of plans of capacity expansion. They will be making an addition of 15 million fiber kilometers to its optical fiber cabling capacity, so nearly doubling it. And this enhanced capacity is expected to come online by June 2020. They are going to be incurring a capex of 320 crores, which will be financed through a mix of internal accruals as well as debt. You'll also have GVK and GMR, which will be in focus, and that's on the back of ET report, which says that AMP Capital is in final talks to buy GVK Airports business at a valuation of 3 to 3,500 crores. And even in case of GMR Infra, it is said to be in final stages of negotiations with Lone Star to offload the airports business stake. And finally, in a bulk deal in Fortis Healthcare, Goldman Sachs Singapore bought 0.5% stake. So let's see if that will have any positive impact on Fortis shares.
All right. Thanks so much for that, Shraddha. Now, I didn't mention this at the start of the show when I spoke about the Asian markets, and in fact, the fact that the Hong Kong markets are trading today. I'm talking about this with regard to the context of the powerful storm Typhoon Mangkhut, which has killed over 50 people in the Philippines over the weekend, largely from landslides. The typhoon caused significant damage to crops in key agricultural areas. In Hong Kong, it ripped off roofs and forced the cancellation of hundreds of flights. Bloomberg's Enda Karan reports.
The Philippines has probably taken the brunt of it. It hit the northwest farming region there, and it has significantly disrupted rice production. Estimated damages of around $90 million US. And that's significant because remember, the Philippines is already facing something of an inflation surge, and that's partly down to food prices, and they're already looking at ways of importing extra rice. So that certainly won't help the inflation outlook in the Philippines. Likewise, in Hong Kong, the city lost an entire day in terms of consumption. Retail outlets and restaurants were shut, the airport was shut, the major race meeting was shut. So there was a significant day of disruption to this region as well. And also in Macau, the highly unusual move of shutting down a full day of gambling on Saturday, which could impact revenue growth by up to 7 percentage points, according to one estimate. So to be clear, quite apart from the human cost of all of this, it could have been much worse, but there will be something of a clean-up bill in terms of dealing with this typhoon fallout.
So to that end, and how long do things start going back to normals?
Well, this morning, at least in Hong Kong, they are pushing ahead with trying to get the airport up and running again, get those flights going. Likewise, in Macau, they're talking about getting the casinos open again. It will take time before all those ferry routes are smoothly back on time, before all of the backlog at the airport is cleared, and until all of the rest of the debris and the damage around the rest of Hong Kong is cleaned up. So by all accounts, it looks as though most of the areas are pushing ahead with it, but it will take some time, Heidi, to get everything cleaned up and to get the cities back on track and to where they were before the storm.
All right, that's the latest update with regard to Typhoon Mangkhut. But there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also several stories that you'll find if you check the website at this moment. Here are just a couple of them. It looks like IL&FS won't be able to raise funds anytime soon. In fact, any further fundraising may take at least a month because the board needs to take shareholder approval to raise the ceiling for debt and equity capital at the forthcoming annual general meeting on the 29th of September. And Walmart has paid 7,439 crore rupees as tax on payments it made to buy out shares of 10 major shareholders of Flipkart, but has not yet done so for another 34 who exited the Indian e-commerce company in the $16 billion deal. That's according to a PTI story quoting tax officials. Well, that's all we have for you in this particular edition of Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.
September 15th, 2008. The day a titan of the investment banking world fell. And event so unlike